We're seeing that the bourse is down today. Take us through what happened there.
The bourse continued in its downward trend, which it has been exhibiting during the week. Actually, on a week-to-week basis, the market is down about 2.5 to 3%. What we're seeing happening in the market is a lot of distribution. That's basically prices coming down, accompanied by heavy volumes. We'll expect this to continue, and we are about to get into another bearish period.
Yeah. Well, take us through the list of the gainers and the losers for today.
The major gainers today were Crown Berger, Pan-Africa Life, you have Kennel there, and you have Kenyan there. But we shouldn't read too much into the list of gainers today, because if you look at the volumes traded, like for Pan-Africa that went up 7%, only traded less than actually 2,000 shares on the market today. So most of the price moves on the top gainers were actually on very low volumes. So there's really no accumulation that's taking place, just a few trades that went through in high prices. The decliners, though, are a bit more interesting, but there are about 17 counters that declined today. And of that 17, 9 to 10 of them are actually banking stocks. And we all know the results that banks have been releasing in Kenya for the first half of the year. So basically, people are beginning to a bit sell off from the banking sector, and we expect them to continue leading the downward trend in the decliners.
Talking about banks, Standard Chartered Bank has lowered the cost of borrowing personal loans by about 3.7%. Take us through why they did lower the interest rates in the first place.
That is actually a shocking move from Standard Chartered, considering personal loans has never been a major part of their portfolio. Personal loans have actually never been a major part of their business. They are more into government securities and corporate lending. So them lowering down their rate for personal loans, maybe it's a shift in strategy, and they're trying to also go for the retail market.
Well, we know that the Professor Ndungu has been calling on banks to reduce their rates to stimulate the economy, of course. Does that mean that other banks are going to follow suit after what Standard Chartered did?
Not really, because as much as the central bank might reduce their central bank reserve ratio and their CBR rate, there's another fundamental that the bankers have to keep in mind is the current state of the economy. If I'm going to lend to someone who's going to default, I better just lend them at a high interest rate so that I get compensated for that. Inflation is also still very high in Kenya. So 16%, I really don't know how Standard Chartered are planning to make their money. And we all know if they start reducing their lending rate, they'll start attracting the lower end of the market. Standard Chartered normally has a very strict vetting process. So we really don't see it even trickling into their bottom line. So we don't see other banks actually following suit.
All right, let's take a look at some of the results that came out during the week. Co-op Bank, I beg your pardon, came out with results. What do you make of these results, and how come Co-op Bank did better than the likes of National Bank of Kenya and Equity Bank?
Co-op Bank did a bit better because they're a bank that is still coming out of high growth. But if you look through their figures properly and you see their strategy that they are planning to implement, we have an issue with the staff complement side of it, where they're just trying to recycle the staff that is currently in the business. So as they expand, we expect their cost aspect of their P&L to start growing, and will also start eating in their bottom line.
Well, a lot of the results have come out of the banking sector fast and furious. How would you say the sector is faring currently in Kenya?
The sector is currently under a lot of stress from high defaulting on the loans that they gave out. Last year, they went all out for retail. They went straight to the low end of the market, relaxed their vetting process for allowing to give credit. And it backfired on most of them. And now we see this year we've reached a point where the central bank governor actually has to try and threaten the banks to lend. But the banks won't lend to individuals, they'll rather lend to corporates or lend to the government. Even to corporates, it's also a bit tricky because they will actually not give money to the corporate bonds that we've been seeing coming to the market. So for the banking sector, they are under a lot of strain, and they're really trying to look for every area they can get income into their bottom line.